Next management now, the management at Max India, Rajit Mehta, MD and CEO at the company is now with us. Sir, revenues from operations have declined on a YOY basis and on a QOQ basis. What factors would you attribute to that? How would you look at the outlook in terms of revenue over the next few years?
See, essentially, when you compare to same period last year, we had a company called Max Skills First, which was generating revenues, and also there was a COVID impact. So if you take those two out, then the revenues, are even stable, but it shows a degrowth because of those two reasons. But our EBITDA has turned positive. It's about, 1.3 crores from a loss of 3.4 crores last year. So that's the main reason why the revenue show a decline. If you look at the next 2 to 3 years, as we have said earlier, our vision is to create an integrated ecosystem, for seniors, comprising residences for seniors, care homes, care at home, and patient days or medical equipment. We plan to create about 8 to 10 communities, across India for seniors, about 2,000 beds of care homes, and a comprehensive care at home and medical equipment business. So the outlook in the next, 3 to 5 years to aspire for about 500 crores plus of revenues. But let's see how that goes.
Commodity prices have come off from their peak recently, which means that cost of construction would have also cooled down. In this light, what is your outlook for profitability and margin? Also, have you taken any price hike to look at the commodity cost and how are customers taking it? Are you planning to roll back? Can you give us some perspective on that as well?
So yes, the material costs have been moderating, still not back to where we were 2 years back, still about 30, 40, depending on the material you consider percent higher than what we had assumed. Yes, we had taken some, price increases, keeping in mind not only the market condition, but also making sure that our, profitability is in the ballpark. We may not be able to earn as much as we envisaged, but that was the intention. So at this point of time, we're out looking at 15 to 17% IRR on the project. The price increases are well within, what the market is charging, other products are charging, other builders are charging. So we're not yet, at a premium compared to others, despite the fact that our product is much better, well suited for seniors. So if the prices continue to moderate, obviously we'll look at, what the right appropriate pricing for the market is.
Your focus is on increasing assisted care services. What is the main revenue driver for the segment going ahead?
So going ahead, the main revenue driver will be care homes, or what is called assisted living outside India, and memory care homes. It's a very large segment. Total, estimated market size only for this segment is about $1.1 billion, while the overall market size for senior care is about 70,000 to 85,000 crores. But the care home segment, or assisted living, as we call it outside India, is going to be the main driver, of our growth in the coming years.
Right, Mr. Mehta, good afternoon. This is Cheryl also joining in the conversation. Your current operations are actually focused in the north. Do you have any plans of expanding it to the other parts of the country? And also, if you could tell us if there are any other projects that are in the pipeline for Max India.
Very much. Our first objective was to establish ourselves, in the northern region, more particularly NCR, which we have done now. And as we look at the needs of seniors across the country, we are looking at expanding to the south cluster, and the west cluster as well. So Bangalore, Chennai, Hyderabad, Pune, Mumbai. Those are other geographies where we are planning to look at in the next few years.
Right. Also, you have a very strong balance sheet. The company has a very strong balance sheet with a cash of about 392 crore rupees. What are the plans with regards to the cash that's on the books? How do you intend to deploy it?
Yeah, we have a very strong balance sheet, consolidated net worth of over 600 crores, well capitalized, about 550 crores of cash plus monetizable assets. This is mainly for our growth in Antara Senior Living or Antara assisted care services. That's what the capital is reserved for. There is a commitment we had made to shareholders many years back on capital reduction or returning back their capital, specifically those who don't want to participate in the growth going forward. So part of the capital will go towards that. But bulk of it is reserved for making an integrated care ecosystem for seniors, comprising residences and Antara assisted care services.
All right, Mr. Mehta, we leave it there. Thank you so much for joining us on the show, talking about Max India.